We all grew up in a time where sports franchises were run like mom and pop shops.
A lot has changed, huh?
Yeah.
Over the years. I remember it was Jerry Buss was in real estate. The late Abe Poland was in real estate. The owner of the Dallas Mavericks was a car salesperson. And now you're seeing much more, I would say, sophisticated and larger forms of wealth.
I think these are global businesses, much more than they were 20 years ago. They were looked at regional businesses. Now you look at, the growth of the NBA in Asia, the Middle East, Africa. I mean, these are really big properties overall.
In the old days, the person who could buy your team very likely lived local. They were affordable enough that somebody in your hometown probably had the money to buy the team. Now, if your team's on the market, you're very likely going out of the city because we're talking global level billionaires.
Ben's right. They take integrated groups now to be able to do the investment levels, especially when you're looking at the big 4 or 5 leagues. From that end, these price tags are exorbitant.
How about investment? How has that changed ownership?
Well, these numbers are just so much bigger than they were not that long ago, and that's a good thing for the people that own these teams and that intend to buy them, but it's more complicated. Even someone like Josh Harris, who's extremely successful, needed to put together a group to buy the Commanders, for instance. The number of people that can stroke a check in their own personal capacity for most of these teams is vanishingly small right now. That has implications across the board in terms of what kinds of minority partners come in, how you put these deals together. The complexity just grows exponentially.
All right, let's take a closer look at some new forms of ownership.
Sports is a unique asset class. It's about $1 trillion industry, and it's actually one of the few asset classes everybody wants to be a part of. Over a 20-year period, if you were an investor in the stock market, you would have made 7.7%. If you were in any of the major leagues, the composite of those 4 was around 11.5%. So that's literally, you would have made 50% more if you had invested in sports. These teams have become worth a tremendous amount of money. If you look at the Commanders, which was the last sale, that sold for $6 billion. It's not a family business anymore. It's not a small business. You're going to see private equity coming in a pretty big way. Sometimes a team is going to raise money to make improvements to the stadium. Sometimes a team is going to raise money because they want more money to spend on players. So the leagues are recognizing that there's more demand and there's more interest, and what they're trying to do is open it up to allow investors to come in and be part of these leagues, be part of the growth. So we thought we could come in and invest and get some pretty good returns.
Ben, what defines private equity funding and how is it kind of worming its way into pro sports now?
Right. Well, one solution to the problem of these teams being so expensive that very few people can buy them is people pool their money into a private equity fund and deploy it through the management of a couple of people who are in charge of other people's money. But it's complicated for pro sports teams that have always been owned by individuals. Now we're bringing in these funds who are brutally practical. They need to see a percentage return. They're not in it for the thrill of being a sports owner. They're in it to make money. And that brings them in with a bit of a different perspective.
Operating on the local level, though, off the court, the ice, we all want healthy businesses in every one of our markets. It's really good for the leagues. With private equity money coming in, we've got to run as really diversified businesses. So sharing best practices of what future opportunities are or ways to enhance your overall franchise value, I think is good for everyone.
The investment comes with some assets. Like if you're investing $300, $400, $500 million into a sports organization, you're also bringing to bear all the reach, all the connections, all the, I would say, the advantages that a Arctos or a Sixth Street or an Aries management can bring to an organization. Maybe they have new ways of thinking about sales, marketing, media, distribution, analytics, and those things are very valuable.
So on top of the need for a return on investment quickly, like what are some of the other pitfalls or challenges of private equity?
Who gets all the information? It used to be one main owner and a couple of minority owners would share the financial reports from the league, and it was a tight circle.
Right.
A private equity fund might be 50 people who have a lot of money in that, and they want to see the reports about the profits and the losses. That many people get to see them. Maybe it gets to me, and they don't want that.
Right.
So how they structure even just the confidentiality rules around these firms is a big question.
I mean, MSE has a large group of owners. Ted is the majority, but then there are a number of people below him.
Yeah.
Is it sometimes hard to kind of make sure that everyone is speaking with a unified voice? And
I don't really think so. If the managing partner has the right mindset, and is inclusive from that standpoint, it really can work very, very well. I mean, we've been very fortunate. Our ownership group, and there's a number of people on the cap table, are a who's who of the greater Washington area. A lot of them are tech pioneers. They've gotten us to think differently about the business. And also, if you've got an incredible leader at the top, the chemistry works throughout the entire ownership group.